Hey everyone, thanks for joining. Of course, here with Curt. I'm going to go over some financials, year over year growth, and as well as Q1 2022 revenue increases. But first things first, Curt, how are you?
I'm doing great. How are you, Jason?
Good, good. We got our first snowfall, so I'm not too happy about it personally, but
Well,
hopefully,
I was in the desert playing golf on Saturday in La Quinta, California, where it was 82 degrees Fahrenheit. So sorry about that.
yep. Moving on. Thank you, Curt. Do you want to kind of introduce it? I know, hey, incredible growth over the past year. We can talk about that, and then some questions that we both saw people asking.
Yeah, I think. Look, I've said it before. I'll say it again. 2021's been a transformative year for our entire business. It took longer than we all wanted to get here, but we got here. And we're just seeing every business unit grow right now. The Q India, what we refer to as the channels business. And the reason we call it that is because that includes the VOD offerings on OTT style platforms through the broadcast, channel streaming or channel that goes over satellite and cable, et cetera, et cetera. So that comprises all those different things, including the new channel that we announced a month or two ago that we'll be giving more details on here pretty soon. That's the channels business. It's growing. It's growing massively. The Chatterbox business is growing and growing really strongly, and we're looking at some ways to get that to grow even more strongly. The QUSA influencer marketing business growing really strongly. And so every part of our business is growing right now. And, I've spoken many, many times in the past about how our lineage with Lionsgate, how Lionsgate built its business from a company that was worth $100 million market cap up to a multi-billion-dollar company was through two things. It was organic growth of their core businesses in movies, television, home video, et cetera. And it was through acquisition. And we plan on exactly the same model. There's no secret about it. There's no, we're constantly looking for Chatterbox style accretive acquisitions, and I expect more of those in the future. And we're constantly investing into the growth of the core business. And so that's, anytime you go in a quarter from 2.6 million to 4.7 million, you've got to be pretty happy about that result. I mean, we did more revenue in calendar Q3 of this year than we did in all of last year. So including the $2.6 million quarter. So, we are on a really, really steep and strong revenue trajectory. Is it going to grow percentage wise exactly the way it has? Probably not, but it's going to grow number wise in a very, very compelling way. And we look for that to continue. So could not be more excited about that part of the business and more positive about how strong we feel that's running right now.
Yeah, no, awesome. And I know kind of, getting two questions on one side, kind of already talked about it, but it's, what's fueling, future growth, what's coming. And I know you already alluded to a few things. And then on the other side, obviously people are asking questions about, what's fueling the current growth. And really, I think we wanted to talk about a few numbers in the actual PR. Did we want to go over the kind of non?
Yeah, well, I think, I think what I've seen online and gotten a few notes from investors that reach out to me directly is concern about the loss. And what people have to realize about that loss, which was 2.3 something million, is that the cash amount of that was about $850,000. Okay. In the quarter. The other loss elements there were all non-cash. And so that's a really, really, really important thing for people to look at. When you look at the cash amount where we've got, whatever it is, $7.5 million of cash, and you look at it and you say, okay, we're burning $850,000 or consuming $850,000 of cash. Well, that says, 7 quarters of lifespan in the company without needing to raise more capital. Is that what the plan is? Is the plan to do that? The answer to that is no, that is not the plan to do that. I might have spoken more in the past about that, but the business has changed dramatically. And we were, we're not a private company. If it was just a company you and I had that was a private company, we'd be looking to say, okay, we're moving the revenue in the right direction. Now let's cut expenses, increase margin slightly, and get to cash flow break even. That's not where we're at as a business right now. Where we're at as a business is saying, what can we do to fuel growth that's big? I don't want to grow this company to a $25 million a year, $50 million a year company. We want to grow this into a company that's doing hundreds of millions of dollars of revenue over the next 3-4 years, and maybe less time than that. And in order to do that, you've got to invest in the business. I mean, honestly, at some level, it's 101. You just can't expect it all to happen by itself. And so we're not taking that approach. We see a huge opportunity for the business right now to do that. We believe we could not be better positioned right now in terms of what I've spoken about with social video and the creator economy. And we're not just going to stand by the side and kind of like trickle that growth and have it go along and go slowly. No, we're going to dive straight into this and make sure that we're doing things that are going to make this the $1 billion plus business that we all want it to become. And that requires, investment. And so a lot of the, sort of, I think, concerns were over cash consumption and what's going on. We've got another dilutive raise and all of this. I'm not going to make a statement right now, nor am I going to make it in the next quarter that we're never going to raise more capital. I will not make that proclamation. I will make the proclamation that if and when that ever were to occur, it's not being done, if that were to occur, to fuel survival and kind of keeping the status quo going. It's because we want to acquire and build bigger business. And you can look historically at any company on the planet Earth that's grown as a public vehicle into a much, much larger company than it was at one point in time. And you'll see that it was fueled by organic growth in the business and investment into that. And that's what we're doing.
Yeah, makes a lot of sense. I mean, you guys have, kind of proven that a little bit already, right? I mean, and investment, a lot of people think buying businesses, but also you just talk about hiring more resources, expanding the channels, doing other things. So it makes a ton of sense.
I mean, we just had a board meeting and we had a long discussion about this. And the reality is that there's investing into surviving and trying to find a business that's even remotely working for you and starting to generate revenue and potential down the road. And there's the business of having a company that's got business units that are all succeeding, growing successfully, gaining more customers, driving more revenue, et cetera. Well, you want to continue to pour gasoline into that vehicle and fuel it. And so we're not going to do that in a crazy way. Frankly, we don't have the capital to do it in a crazy way. We're not going to just make wild ass bets hoping that something works out, but we are going to be very tactical in terms of what we're going to do around content, around distribution, around headcount, around marketing, and other things that collectively are going to drive the value for all shareholders. The other thing that I'll repeat to everybody, I'm still a large shareholder in this company. I'm not looking for this company to have a 30-cent stock price. That's not the goal here. And so we are aligned with our shareholders in wanting that to be much, much, much bigger than what it is today. And we fully expect that the work we're doing today is going to drive that in the future.
Cool. No, awesome. Look, love it. The passion comes through. I think makes a lot of sense. And I know we covered a lot of the questions we were both seeing. Anything else you wanted to get in here? Any kind of updates you find of year you wanted to share?
Sure. Yeah, I think we haven't locked the date in yet, but it'll happen here before the end of the week, where we're going to do an open investor call before the Christmas break. Right now, tentatively, the date is December 16th, but that may or may not shift. I think that'll be when it happens. On that call, not only am I looking to recap the year, but I'm looking to talk about what's happening going forward. There's a number of things that will, in all likelihood, be announced publicly between now and that date, which is part of the reason I want to wait until then to do that, because a lot of that stuff is going to be affecting what we're doing, especially in Q1 and Q2 of 2022. But look, we're ending, this quarter is going extremely well. We're ending this year strong. We've got huge ambitions for what's going to happen for our business in 2022 across the board. And Christmas 2021 is looking a hell of a lot more exciting than Christmas 2020. So couldn't be more pumped over what's happening in the business right now.
Love it, love it. Well, hey, if anyone's got questions, as always, drop them below. I know Curt's doing a call soon, but we'll make sure that we get some over to Curt and we're able to go through a bunch of the kind of the exciting things that happened this year, and push things forward. Curt, thanks so much for joining.
Yeah, thanks, Jason.